Ladies and gentlemen, good day and welcome to the Q4 and FY2024 earnings conference call of PPAP Automotive Ltd. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Jain, MD and CEO of PPAP Automotive Ltd. Thank you and over to you, sir.
Yeah, thank you very much. Good morning, everyone. I'd like to extend a very warm welcome to all the participants joining us on this call. With me is Mr. Sachin Jain, our CFO, along with SGA, our investor relations advisors. I trust you've had an opportunity to review our results and investor presentations, which are available both on the stock exchange as well as our company's website for easy access. Before delving into the specifics of our financials and our performance, I'd like to provide a brief overview of some key developments in the industry. The Indian passenger vehicle industry reached a significant milestone by surpassing 4 million sales in financial year 23-24. Reaffirming India's position as the third largest passenger vehicle market globally. This achievement was driven by an 8.4% year-on-year growth, spurred by new SUV launches and improved semiconductor availability. Though this growth rate was lower than the previous year due to the tapering out of pent-up demand, but still the industry remains buoyant. The global context shows promising signs as well, with inflation and interest rates nearing its peak, creating a favorable environment for continued growth. Despite these positives, challenges such as fragile emerging market currencies, domestic policy changes, and geopolitical uncertainties remain. In the CV sector, sales volume for the financial year 24 reached 968,000 units. This growth was spurred by robust economic expansion and increased construction activities, leading to enhanced fleet utilization rates and cash flows for fleet operators. Nonetheless, solid order bookings and positive market sentiment suggest a resilient growth trajectory for the sector. In the broader automotive landscape, the Indian market is poised for sustained growth, with expectations of a 7 to 8% annual increase. The upper segment of the demand pyramid is anticipated to expand even more rapidly, supported by rising consumer optimism and premiumization trends. The EV sector in particular saw a 32% growth over the past year, with penetration rising to 5.4%. The consumer preference is currently undergoing a change wherein SUVs are becoming more popular across the different ranges. This change has resulted in a shift of market share from the incumbent players, and we see new players contributing to the rapid growth of the market. While PPAP has a strong relationship with the incumbent manufacturers, we are strongly pursuing development activities with the other leading manufacturers as well. While we have already made strong inroads with Tata Motors, I am happy to share that we have also started working with Mahindra & Mahindra, however, at the Tier 2 level currently, and we expect to become Tier 1 in the current financial year. Our relationship with Hyundai and Kia is also strengthening, and we have started exporting our products to Kia's global operations. We continue to outperform our competition at our customers' end. For the past year, we have received many awards from our customers including Honda, Maruti Suzuki, Toyota in the areas of overall best performance, quality circle and Kaizen awards. We are leaving no stone unturned to deliver superior value to our stakeholders. During the past year, we have continuously informed that this year would be a reckoning for us, and we will deliver superior performance going forward. In line with this spirit and target, we have taken many actions within the company which have now put us on a strong footing to achieve superior performance. We have done reforms on our HR structure and are aligning the KRAs of everyone in the company to boost the performance. We have also done internal restructuring, which brings clear focus on unutilized capacity and have aligned ways and means of utilizing that capacity both for short-term as well as long-term business. Our sales team across the different verticals are now interacting with each other and are supporting each other to develop more opportunities by cross-selling the products offered by the company. We have also aligned our engineering team so that they can support the marketing team by developing newer products faster. The manufacturing team has been aligned to drastically cut down the wastages and to make the products faster and meet the customer's expectations regarding quality and delivery. The supply chain team is well aligned to strengthen the supply chain sourcing matters to further reduce our cost. Last year, we had informed that our JV was in trouble. I am happy to share with you that in the year, we were able to make great strides into reduction of the losses and have been able to cut the losses to a larger extent. I am sure that based on the trends which are available in the past 50 days, the JV company will become profitable this year and will start positive contribution to the group. The company remains focused on the automotive industry. During the year, we commenced production of parts for Honda's new SUV Elevate, Maruti Jimny, MG Comet, etc. In total, we have developed parts for 14 models which were launched in the financial year 24 and are developing parts for 10 models in financial year 25 and are discussing on many more projects which are supposed to get decided in financial year 25 with all our customers. The company's capacity utilization is at 75%, even though our products are adaptable to various engines. For long-term viability, we have secured contracts with customers planning to launch electric vehicles in the future, with Maruti Suzuki remaining our largest customer in this regard. Stabilizing raw material prices and internal rejection reduction have significantly impacted the company's margins since last year. Our active negotiations with customers to compensate for inflationary costs have yielded favorable results this quarter. I am pleased to announce that our standalone EBITDA margin has increased from 8.8% in Q4 financial year 23 to 9.4% in Q4 financial year 24, which we had always said that in this year we would be somewhere in the 10% range of EBITDA for this year. Our second pain area for the group was our lithium-ion battery business, which was in a big turmoil last year. After many discussions and analysis, we have set forth a focus area in this business, and we are confident that this year we would come out strong in this business as well. The commercial tool room division has been renamed as Miraki Precision Molds and is getting good traction from the market. I am happy to inform you that we already have confirmed orders to achieve 50% of our annual targets in this division, and we should be doing good business in this as well. Our aftermarket division has further expanded their network to 123 distributors across India and is now venturing into international markets. We have added over 550 products this year, bringing our total to more than 1,080 SKUs. I am very confident that the company's efforts over the past few years will result in improved outcome for this new year which has started recently, thereby strengthening the fundamentals of the company and the group and creating more value for all the stakeholders. On the sustainability front, we have obtained EcoVadis certification, voluntarily complied with BRSR requirements, and we are recognized as a great place to work. We strive to enhance our sustainability reporting process to meet the highest standards and demonstrate our efforts in creating sustainable value for all stakeholders. We will be focusing on our improvement in Scope 1, Scope 2, Scope 3 activities, as well as reducing the water consumption in the company, and our target is that by 2040, we should be a neutral company. Our latest sustainability report for financial year 23 is available on our website, which highlights our CSR activities as well. Let's now discuss the financial performance for the quarter 4 and financial year 24. On a quarterly basis, our top line grew by 4% to 132 crores in the quarter. However, the EBITDA grew by 11% to 12.4 crores in quarter 4 financial year 24. This trickled down further in our PBT numbers as well, where we saw a 26.7% increment to 1.9 crores in quarter 4 financial year 24. For full year, on a standalone basis, revenue improved from 492.3 crores to 503.9 crores, reflecting a marginal increase of 2.3%. Additionally, gross profit increased year-on-year to rupees 204.8 crores, with a gross profit margin improving to 40.6%. EBITDA for the year stood at 43.8 crores with a margin of 8.7%. Our loss for the year stood at 4.7 crores due to a one-time deferred tax of rupees 7.9 crores, which will be reversed and adjusted in the subsequent years. In terms of consolidated financials, in quarter 4, the top line has risen by 2.6% year-on-year. Full year consolidated top line increased from 511 crores to 523 crores in financial year 24. In financial year 25, we expect a significant improved consolidated financial performance due to the industry growth and due to the efforts that I have already touched upon. Positive contributions coming through all our new businesses that we have started, our JV company becoming profitable, our lithium-ion business getting more utilizing more capacity, the tool room significantly getting more orders, and aftermarket division expanding their network. All these things put together will put us on a very strong footprint to grow from this new year onwards. Our capex spending will be aligned with the OEM's capex plans. Thank you for all your attention, and we are open to any questions. Thank you very much.
Thank you very much. We will now begin the question and answer session. Participants present on the audio bridge who wish to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ravi Shah from Apple Securities. Please go ahead.
Yeah, hi sir. I have two questions. So the first one is on capacity utilization. So it is approximately 75% as of now. So at peak utilizations, what is the sales that we can see, and what would be our peak utilization going forward?
The voice is not clear actually.
One second. I'll just. Am I audible? Hello?
Yes, sir, you're audible.
Hello.
Yeah, it's audible, right? So my
Yes, it's audible, but what's not clear at the time.
Yeah, so my question was on capacity utilization. So it is currently at 75%. So where do we see the peak utilizations, and what kind of sales can we expect at peak utilization?
So you are talking about the capacity utilization for the next year, for FY25?
Yes, sir.
Yeah. So internally the orders which we have in our hand, so we expect the next year capacity utilization should be more than 80% for the full year basis.
Understood. So previously there was a discussion on maintaining our EBITDA margins at around 15%, but now there's a mention of 10% for FY24. So considering there's a decrease in our commodity costs and potential price increases from our customers, why is the EBITDA margin not growing in line with this?
No, if you see the EBITDA margins improved that way, because in this quarter one we have lower sales
So that has impacted their certain internal inflationary costs also that has increased. So overall gross margin has improved due to the improved realization and improvement in the commodity prices. So that we are working on. So another the growth EBITDA would come from the, we have mentioned, the increase in the top line growth. So last year we grew 2 to 3% only. So next year we are expecting better growth due to the higher participation in the new models which are coming up and the improved sales in our subsidiaries and better profitability on JV companies. So overall basis, so next year would be better in comparison to the FY24.
Understood, sir. Thank you, sir, and all the best, sir.
Thank you. The next question is from the line of Piyush Parag from Nuvama Wealth. Please go ahead.
Yeah. Hello. Good morning, sir. And it's good to see that numbers are improving on a quarterly basis. Congratulations for that. And thanks for the opportunity. So my question relates to if I have heard right, did you mention that there was some rejection during the quarter? If you can give more colors on that, what kind of rejections was there? And probably then I will ask my second question, sir.
About rejection, it is just around the mentioning that we are doing continuous improvement on the process rejection we internally have, because every process has certain kind of rejection, like we have injection molding, the assembly process. So each process we have rejection. It is the feature of any manufacturing process. So as I mentioned that we are improving on those rejections and we are taking necessary action to further reduce that.
Okay. So what is the rejection right now? If they have to like the percentage of the sales, how much it would be?
Yeah, it varies product to product. So we don't disclose that kind of data because that is internal data. So we cannot share that.
Okay. So my next question is on typically, your major clients, your key clients, Maruti, Honda, there and other players as well. They're doing extremely strong growth, and so.
Sorry, could you speak a little louder? It's very difficult for us to.
Okay. Is it audible now?
So may I request you to use your handset, please?
Okay, just a minute then. Yeah. Am I audible now?
Yes.
So my question is, most of the clients and the key clients, such as Maruti and.
There's a disturbance from your end. Can you please repeat your question?
Okay. Is it audible now?
Yes.
Is it still the?
Yes, sir.
Yeah. Okay. Perfect. So, sir, my question is related to your key clients, Maruti and Honda and other players are doing well. They have shown growth in FY24. Similar numbers are not, has been seen on your numbers. So, why is that? And second question would be like how your new business share would evolve over the next couple of years. If you can throw light on these two questions. Sir.
So basically about the top line, if you see, so there are certain models and UV launched by the customer, so they have better top line. So there are certain models where we launched the business 1 or 2 years back that were launched by Maruti, like new shift that is coming up, and there are other models also. So that's why our top line, we did not get the replacement business for those models. So our top line has not grown in line with as you mentioned about the Maruti. On the side, we are getting regular orders and we are presenting every model which they are launching in India. So as we mentioned in the initial speech, in next year we are contributing more than 10 models which is being launched in the next financial year. So the business which we have lost in the previous year due to the replacement model where we did not get the business. So that will be compensated in the next year. So we are getting the orders for the new models and for the replacement of models also in FY25.
Okay, got it, sir. And the second question was typically on the new business share, how it's going to be, sir. That was the last question from my side.
So the new business share, again, we are working on, as Maruti is still our biggest customer, so we are doing everything to get the business from the Maruti also, Honda also, and to increase the business with other customers like Tata. Initially used to be very small, now it is increased to 8%, and next year also it will increase. So we are working with the new customers where we are less present, like Hyundai, Kia, and Mahindra side. So for the next FY25, I think the ratio would be in the similar range, because it takes time to get the business and get the part developed for the new customers. On Tata side, it would increase. Honda side, we will be able to maintain that because we are getting the business from the Honda for every new car which they are launching. So next 2 to 3 years, it would be in the same line. However, it would be increased for the Tata, Mahindra to Tier 1, it would increase, and Hyundai and Kia also, it would get increased.
Sorry to interrupt you, sir. There is a background noise from your end. Can you please come near to the mic and speak?
Yeah, I am near to the mic only, ma'am.
So there is a airy sound from your background.
Maybe due to the AC, so I am more near to the mic now.
Okay, sir. Now it's loud and clear.
Yeah, anything else?
No, thanks a lot, sir. Best of luck. I will come.
Thank you. The next question is from the line of Rohit Mehra from SK Securities. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes.
Yeah. Good morning, sir. So I have a couple of questions, and my first one is, how do you see demand in FY25, and do you anticipate any slowdown going forward at an industry level?
Well, the official figures are somewhere in the range of 8 to 9% of growth, but due to elections and due to other factors, the industry may not be able to achieve 8 to 9% growth in this year. So there might be certain problems which may occur. So that is why for our company, these other divisions which are not dependent on the automotive industry will play a key role in the growth strategy for this year.
Okay, got it, sir. And my second question is, how much percentage of revenue comes from aftermarket business? And have we reached to the 10% of the overall top line from that vertical?
No, currently it is about 3% of the total group sales.
Okay.
We started this about 3 to 4 years back only, and right now it's 3%, but we expect this to become at least 10% of the total revenue in the next 3 to 4 years.
Okay, got it, sir. That's it from my side, and all the best. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. The next question is from the line of Karan Mehra from Mehta Investments. Please go ahead.
Hi. Hello, sir. Thank you for the opportunity. Sir, a couple of questions from my end. Sir, how is our tail container business doing in terms of top line and margin?
Sorry, we didn't understand that. Could you repeat it, please?
Sir, how is our tail container business doing in terms of top line and margin?
For the tail container side, it is very small. I think because in the industrial product division, along with the tail container, we are developing the sealing system and injection molded part for the industrial purpose also. So our main focus is not on the paint containers, but onto the ceilings or the profiles that can be made for the industrial product side.
Okay. And sir, is there an increase in average selling price for our products, especially considering this ride in crude prices? Could you throw some light on the same, please?
So right now there is no such impact. We have discussed with our pricing team. So right now it is in line with the averages which we used to have in the best period.
Okay. Sir, and just a month to go down the quarter. So how is Q1 shaping up so far, and do we see any margin improvement as compared to Q4?
Like I mentioned in my opening commentary, in this past 50 days of this year, on the JV, on PPAP standalone company, also margins are almost intact. On the JV company, margins are getting better because we were able to implement the last year's strategies starting from 1st of April this year. The commercial tool room, I've already said, they've already have an order book of 50% of their targets, what they've set for this year, and they're working on fulfilling the rest 50% in the next 3 to 4 months. We should have a good visibility there. Our aftermarket business has already established 123 distributors, and their monthly run rate of business is increasing now. And in the last quarter of the previous financial year only, they've been able to almost improve it by 10 to 20%.
Okay, sir, that answers my question. Thank you and all the very best.
Thank you. The next question is from the line of Kunal Shah from Anova Capital. Please go ahead.
Hello.
Yes, sir, you're audible.
My first question is, how has the growth in SUVs affected the content per vehicle? Have you seen any improvement in content per vehicle?
For the new business?
Yes.
So for the new business, I mean, we were originally doing about roughly 3,000 roughly worth of components for any model. So depending on model to model, this contribution was much higher in Honda related models, somewhere in the range of 6,000 rupees to 8,000 rupees. And it was little lower in the Maruti models. So Maruti side, now the new EV which they are going to launch this year, we have a contribution of 4,600 rupees per vehicle, which generally used to be about 2,500 to 3,000 rupees. And Tata vehicle, which is going to get launched this year, the new vehicle. In fact, the mass production is going to start next month in June. Our per car contribution is roughly 6,000 rupees, which is, I think, one of the highest ever which we have been able to get from Tata Motors.
Okay.
For Honda, the new vehicle which is going to launch this year, our per car value should be in the range of 4,500 to 5,000 rupees.
Okay. And also, could you shed some light on the margin improvement observed with especially Maruti, despite like its 50% plus revenue contribution remaining steady in the previous quarters? What specific factors have led to this margin enhancement, especially considering the historical challenges with negotiations on price from Maruti?
Yeah, Maruti side, it is very difficult to get the cost correction, so it is not that easy. The discussion goes on from the 1 year, 6 months, 1 year. So for the inflationary cost side, we have settled with the Maruti. So there are certain parts is also there where we are discussing Maruti for the price increase side. So it takes time with Maruti because there are certain internal procedures are there. So that we are continuously discussing with them, and we are hopeful that this year we have the good response from the Maruti, where we would able to get the cost correction on the inflation cost side, certain part side, like PPI also in JV company, we able to get the price increase compensation. So that this year also we will be able to get a compensation from the Maruti, where we are looking for. It may take time, it could go up to Q2 or Q3, but we are quite confident that we will be able to get those corrections with Maruti.
Okay, that's it from my side. Thank you. Good luck.
Thank you. A reminder to all the participants that you may press star and 1 to ask questions. The next question is from the line of Ashish Raut from Jury Engine. Please go ahead.
Hello, I'm audible.
Yes, sir, you're audible.
So good morning. I have a couple of questions. As you mentioned, the company has witnessed a net loss due to higher taxes.
Sorry to interrupt you, sir. May I request you to please use your handset?
Okay, just a second. The company has witnessed, so I'm audible now?
Yes, sir.
So the company has witnessed a net loss due to higher taxes. Can you elaborate more on that?
Yeah, it is the deferred tax liability impact, and it is non-cash item. So there are certain auditor suggestions regarding some the tax provision which we are considering. So there will be no impact on the actual tax liability. It is only the balance sheet item or the non-cash item which is required in compliance with the accounting standards. So there are certain change points as suggested by our statutory auditor, because this year we have the different auditor. So every auditor has different opinion on the explanations and provisions. So that's why we have accounted it in the quarter 4. And it is purely non-cash item. There is no link to the actual tax payment. And that will be adjusted against in the future tax expenses like the deferred tax effects.
Okay, understood. And the second question is, which are the new models that company has commenced supplying its parts?
For this financial year?
Yes.
So we started for Maruti France, MG Comet, Suzuki Jimny, Invicto, which was, it is the same vehicle as Toyota. Hyundai Exter, we are supplying parts to. We have Seltos, Honda Elevate, Nexon, the new refresh, Nexon EV and Nexon, and Citroen C3 Aircross, Kia Sonet, Hyundai Creta, and Tata Punch EV. So all these models were launched in 23-24, in which PPAP and PTI put together, we have developed parts.
Okay, thank you. That answers my question.
Present in almost 93% of the total new models which were launched in 23-24.
Okay. Thank you.
Thank you.
Have a good day.
The next question is from the line of Deepika Rathi from SK Securities. Please go ahead.
Hello, sir. So I have a couple of questions. So my first question is, how is the order book stacked up currently, and have we secured any new orders for the newer models to be launched during the year?
For the automotive business, which is the primary business for the company, we are working on 28 projects in this financial year, and most of these vehicles will be, out of this 10 models will be launched in this financial year, and the balance will be in the subsequent years. So we are working across with different customers like Maruti, Tata, Renault, Nissan, Hyundai and Honda for their new models which are going to be launched this year.
Okay. And my second question is, how do you view the battery pack business in terms of scale and revenue projection for the upcoming year, Additionally, what measures have been taken to address previous challenges, and what are the expectations for the next 4 quarters, sir?
Yes. So in my opening commentary, I have always in this entire year mentioned that lithium-ion battery business was in big turmoil for us, and it was a big concern. And we had to figure out what direction we need to take in that business. So when we started this business, our focus was basically on EV, two-wheelers and three-wheelers. And unfortunately, that focus and did not play out too well. Two things happened in that business. The EV two-wheelers, the good makers, the established organized makers have put up their own battery pack assembly line in-house. So there is no opportunity of working with the good players. The other players who we were working with, unfortunately, after all this AIS implementation and FAME 2 revision, they have lost out on a lot of business opportunities. On the three-wheeler side, we developed a couple of battery packs for our customers, but unfortunately, they also were not able to start mass production, which was supposed to happen. So now we have shifted our primary focus to the solar and the ESS side. As you know, the government is focusing on solar power in a very big way by providing rooftop solar and on-grid and off-grid solutions to the customers. So that is one big focus in this lithium-ion battery business for us. And second is the ESS focus, the energy storage solution. There are many applications for this. Inverters require a battery bank. Your mobile towers, I've been told they are the second largest consumers of diesel in the country after railways. And they have been mandated to shift from diesel generators to a battery solution, a more environment-friendly solution. So we are seeing a lot of traction coming through on that front. And things were not so good till last financial year, but since April, I can tell you that we are getting a lot of good inquiries from our customers, and in this month of May especially, we have a very good visibility in that business. So now what we are trying to do is that this whoever customer is getting attached to us in May month, we are exploring with them, getting into more contract type of a thing, so that we can continue with that business over a long period of time with that customer. But things are moving in that company now, and we are very confident that the new direction is the right way forward. And now it is a matter of time when we have more utilization of assets and more top line and more better bottom line in that business.
Okay. Thank you for answering my question.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask question. As there are no further questions from the participants, I now hand the conference over to Mr. Abhishek Jain, MD and CEO of PPAP Automotive Ltd for closing comments.
Thank you very much, everyone, for joining us on this call today. I know the results are not as they were expected, but I can assure you things are getting better. If you look at the EBITDA margins, operational side, we are getting better only because of this tax liability. The company has been is showing a net loss on its balance sheet, but it is not a cash item, and it will get adjusted over the next couple of years. It was a view taken by our statutory auditor that it should be part of the balance sheet. I can assure you very well that we are working very hard to make sure that things are much brighter for the company, and we are seeing the shoots of it, and we expect that this year will be much better for us than last year. So thank you very much everyone for joining us on this call today. Thank you to the moderator for doing excellent moderation on the call, and thank you very much Akash from SGA team for organizing this conference call today. Thank you very much.
Thank you.
On behalf of PPAP Automotive Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.